Let me have a look on this. Be easier. How do I see comments? Sorry about this. I have no idea. Is it in the studio? Comments. There you go. Right. I haven't responded. I have responded. Not that one. Not that one. Not that one. Where is it? Filter. Have the comments gone? Help review? No. Where did they go? Oh, here it is. All right. Perfect. So he writes, this guy DR2522. If you analyze this candles at low volume, lower time frame, and say something delusional, then good luck. And if you dare next time in video, check the order books. Right. I did respond, but I'm going to check the order books as well. Why not? And then what else is there? Is there anything else that's interesting? No. So when it comes to low liquidity tokens, yeah, the question is this: can you evaluate based on candles? Yeah, that's the question. Like, can you do the candles reflect what's happening because it's a low liquidity environment? And he doesn't seem to think so. But I'm not really like evaluating, like I'm not trading this token. So therefore it doesn't really matter on the lower time frames, wherever you, let's just say for the sake of example, the daily time frame is a lower time frame. I'm not trading this based on daily time frame candles, right? But if you go to the higher time frame candles, like the weekly candles or the monthly candles, then you can't say that volume is insignificant, because it isn't insignificant. Yeah. On the volume here is 36 million. That's last month. The previous month it's for 34 million. The previous month it's 39 million. Yeah. These aren't insignificant levels of volume. At these levels, if I was to say this green candle with a wick above it, that's a 36 million volume candle. At these levels, 36 million tokens times 0.0, let's say 3, that's $1 million worth of volume. That's not insignificant. For this kind of token, that's about a 10% of the market cap of the value of this token. Yeah, if Bitcoin has a trillion market cap, or let's just say it has 800 billion right now, it's 800 billion, and 10% of that, well, what is that 10% of 800 billion? Well, that's 80 billion in a month. That's not insignificant volume. Like a 10% of the market cap is not insignificant volume. And on these monthly candles, we've been having only on this exchange MEX, we have 39 million, 34 million, 36 million volume at these lows. That's high volume. That's not insignificant volume. Yeah. So the previous month was a little bit lower, 25 million, and then 19 million. So these two candles are relatively low, but they're down candles. So you want candles that go down to be low. And we've had a little bit of a defense of the lows at these low prices. So in total, we've had over 100 million, and that's just on MEX. And if you want to compare that, if you want to look at the other exchanges, yeah, and see what it is on those, well, look, This is gate. Last month was 37 million. The previous month was 34 million. The previous one was for 43 million. The previous month was 38. This isn't low volume, yeah. So you can't tell me that these candles aren't true, because this isn't low volume. These candles are reflecting significant volume, 10% volume. This exchange is 10%. MEX was 10%. These candles are saying the same thing. They are actually, it's the same kind of print. Look, if I was to take these two exchanges and put them side by side, so you can see MEX and gate. This is gate, this is MEX. Let me join them. They are joined, perfect. And why is that jumping? Never mind. Oh, I have to pull that down, that's fine. So look, MEX 36, gate 37. Same candles. Let's look at the closes. Let's actually look at these candles. Let me put this on auto. Put that on auto as well. Make life a lot easier. That's better. Yep. Look, the candles look the same. Last month, it closed higher than the previous candle open. They both did the same thing. They both had expanding wicks. This one didn't take the liquidity from this. This one didn't take the liquidity from this candle. So this one took the liquidity from this red candle. This one didn't. Okay, so there's a little bit of divergence in the extent of how the price moved up, but in all essence, they're saying the same thing. They're basically printing the same thing, the same exact data. In the current month, the month that we are now, right, MEX has obviously been bought higher than gate. So that's market buys, and the volume on MEX, but the volume on gate are pretty much the same. We're roughly in the same position. Yeah, roughly in the same position. It's pretty much the same. Then if I was to go from gate and move that to KuCoin and move this one, compare it from MEX to KuCoin, last month from KuCoin we had 52 million volumes, same candle, it's exactly the same. The previous month it was less, it was 23 million. The previous month was 20. So we've had, last month we had an increase in volume on KuCoin, yeah, but it's still a significant amount. That's more than 10% of volume. So in these three exchanges last month, we had 30% of the market cap in volume. And you add Binance, not Binance, you add Bybit to the mix and see what Bybit is saying. Look at the volume in Bybit. Like, that's a significant increase in volume in Bybit, and it's only 12 million. So in the scale of things, it's insignificant, but it's very significant in the scale of Bybit, and that's important too. So the interest isn't just from one or two exchanges. There seems to be increasing interest in all of the exchanges. And when you look at the candles, look, this Bybit candle and this MEX candle, this green candle, is the same. It took the liquidity above this red candle, but it didn't manage to take the liquidity above this green candle. And it's the same on MEX. So that guy who is saying that this is a low liquidity environment and these candles are meaningless, is talking nonsense. Literally talking nonsense. If it's a low liquidity environment, all you have to do is expand your time horizon to get more volume data within the candle itself, and that's why you go to monthly. That's why you go to 3 monthly. Let's go to the 3 monthly. Yeah, let's change this to let's change this back to gate. Let's look at the 3 monthly candles. Let's look at the volume over the last 3 months. So on MEX we had 110 million. On gate we had 116 million. That's a third of the coins, the tokens. There's only 290 something, 92 million coins in circulation. I know for a fact that most of them are probably not in circulation because they're in the treasury or in the foundation, development fund or whatever it's called. And I said before, my tokens aren't in circulation. There's a lot of tokens that aren't in circulation because people are accumulating. And the fact that we've had so much volume in the last 3 months, on each exchange we've had a third of the token supply being traded. And if you were to take that, if you were to look at all of the exchanges and calculate, let me do that for you. So 110 million plus 116 million plus, and I'm not even going to go to Pancake Swap or Uniswap. I'm just going to look at the exchanges. And on KuCoin it's 101 million. And on Bybit it's of all of them it's the least, it's 17. So that's 344 million tokens have been traded in the last 3 months, not including January. So we're going back October, November and December. Yeah, 344 million in total on 4 exchanges. I'm not even looking at Pancake Swap or the KuCoin, the BTC charts or the ETH charts. I'm just looking at the USDT on those 4 exchanges, 340 million. So if you look at CoinGecko, yeah, and you have a look at TRVL, market cap 9.2 million and number of circulating supply 290. So more tokens, 344 millions were traded. More tokens were exchanged hands in the last 3 months than the total number of tokens in circulation. I don't care if this is a low liquidity environment. These candles are true. These candles are correct. Yeah. When I'm analyzing these candles on a higher time frame, they are 100% reflective of the volume and the price and what they're telling me, and that's how I'm analyzing this. So I don't care if you think this is a low liquidity environment. Well, don't look at the candles on the daily chart if you don't want to. I'm not really paying attention to the candles on the daily chart because most of what I'm doing when I'm analyzing this is I'm looking at formations of candles and I'm looking at the ranges of candles. I'm not looking at individual candles. Yeah. I'm just looking at the formation and the ranges, and what I'm seeing, this is KuCoin, what I'm seeing is an accumulation range. I've said that we're accumulating. Yeah, we're in this range and we haven't left this range. We entered the range on the 2nd of December and now today we're on the 6th of January. That's 5 weeks in this range, right? And the fact of the matter is that we're slightly higher than a previous range. We were in that range from the 13th of July 23 until we left that range on the 2nd of September. So if you look at this, if you compare this range here to the range that we're in now, yeah, you will notice that the price on average is slightly higher. It's a little bit more bullish now in comparison. You see, the point of control, the volume was relatively speaking was low, and as soon as we came into this range, you see how the point of control is above the value area high of that previous range. The point of the value area high of the previous range is this upper blue line, is roughly speaking slightly above the value area of low of this current range, and we are at the moment on our current range. The price is above the point of control, which is the highest volume node in terms of price of our current range, right? I don't care about liquidity. I'm not care about the low liquidity. Yeah, sure, this candle going up, market buy, someone wanted X amount of tokens and they wanted it immediately in one go. They didn't want to wait. They weren't looking to accumulate because, why? Because their time horizon, whoever did that, their time horizon was years. In a yearly, if your time horizon is years, you don't care about 5, 10, 15%. Some people don't care about that. They just want to accumulate tokens, like market buy. You know, sometimes when I buy, I market buy too. I'm not too worried about 5%, 1%, 2% here or there. And some people are like that. It doesn't mean anything. You can't go, oh, low liquidity environment, let's just throw all the charts out of the book. The charts are irrelevant. The charts are meaningless. That's whoever's saying that is parroting something that they've heard from someone else. Yeah. The reason that people say that is because they don't understand candles. That's why they say that. They don't understand it. But rather than admit their own weaknesses, I don't understand it. That would be admitting your own weakness. They say it's all rubbish. They say it's irrelevant. They say it doesn't matter. They say it's insignificant, and you're just parroting what I've heard other people say. In low liquidity environments, candles, levels, patterns are irrelevant. I've heard that parroted time and time again. But if you increase the time frame, go to a higher time frame, you have the volume which gives you the data. Okay, now this swing failure, was that correct? I don't know. I don't even think it matters. We know that there's a level there. We know that there's a level there. If you extend line going all the way back, you can clearly see the candles, the way the candles behaved around this level. You see, we know there's a level there. Yeah, doesn't matter if the candle pokes through or not. There's a level. It's obvious that there's a level. You can't see that, then you don't want to look, or you're literally blind. Yeah, but there's a level there. Okay, it's for the price to get through a certain level. You would expect the price to test it on a few occasions. Yeah, there's no reason to think that the price is going to get through in one test or two tests. It might take 3, might take 4, might take 5. The more you test the level, eventually you're going to get through, and then the onus is then to hold and flip that level into support. Right? It's just the way it works. Now, I didn't make that up, and you're saying to me, people are saying to me, low liquidity, you can't look at candles, ignore candles. Well, as I said to you before, I'm not looking at the lower time frames when I'm evaluating candles. If you've been looking at any of my videos, I've been looking at the highest. I start with the highest time frame. I start with the 12-month time frame. I'm looking at this 12-month candle. I'm looking at the volume on this 12-month candle. The volume traded in the last year was 449 million tokens. That's 1.5 times, 150% more than the tokens in circulation currently, and that's only on this one exchange. That's enough. That's a lot of volume for that one candle. Yeah, there's a lot of volume has gone to create this candle, and it's an inverse hammer at the lows. Yeah, this candle is correct. It's true. These candles on these higher time frame candles are correct, right? To create this inverse hammer, that's 255 million tokens went to create that candle. To create this red candle, it's 154 million tokens went to create this candle where it clearly reacted off these lows, and it closed 50% above 50% above the body of this green candle. For me, that's a bullish reaction, right? That's a bullish. Basically, that's telling me that the bears have failed. They've failed to take the price lower. Yeah. If the bears were in control, this is the red candle says to me that the bears are in control, and the bears have failed to take it underneath 50% of the body of this green candle. So they're weak. The bears are weak. That's what it's saying to me. The 3-month candles are also pretty accurate. You know, there's enough volume. Look, 3 months ago until the end of December, 101 million in volume. When I tell you that this candle closing above this wick is important, and you're saying to me in low liquidity environment these candles are irrelevant, well, this candle that created this red candle, it required 98 million tokens to create that candle. I argue that these levels are not insignificant, they are important. Yeah, I think they are important. And I wouldn't be surprised if we are making the low of this next 3-month candle now. I wouldn't be surprised. At the moment, for me, it looks nice. It looks like kind of what I expect for a push up, but I mean, let's see what happens. We've already had nearly 6 million, 5.79 million in volume come into this candle already. Yeah, in the scale of 3 months, we're already 5% into this candle in terms of volume compared to the last. We have, how many more weeks do we have to complete this month now? We're only in week 1. We have another 11 weeks. We're well ahead of schedule in terms of volume for this candle. This previous candle was 101 million in volume. That was a 12-week candle, right? So if you break it down on a weekly basis, then that is 101 million divided by 12. That means that's 8.4 million per week, right? So right now we're up nearly 6. We're almost at the first week. Okay, so maybe we're slightly behind schedule, but we're almost on par. Like, we're not, it's not behaving badly, you know. It's not low. It's almost on par. And remember, this is only one of 4 of the exchanges, the centralized exchanges. And on aggregate, I mean, let's look at the aggregate. This is KuCoin. Let's see our current month on MEX is 5.2. That's compared. So we are slightly below what you would necessarily want, but you know, we're only just beginning, and we have to see how that pans out. Okay, that's fair. That's a fair statement. We are slightly low on volume, but look, I don't expect there to be significant volume right now because we're still in accumulation. I want volume when we start moving out of accumulation. Yeah, I don't care that the volume now is relatively speaking low, because actually I don't want the prices to go up. I would rather for people to accumulate in small amounts over a longer period of time so that people can get the better prices. I want people to get better prices, and the way to do that is to buy small amounts over a long period of time. Then you can get a better price on average, on aggregate. I don't want people to buy all of their tokens and for the price to slip up to like 5 cents when all they had to do was just scale in at these lower prices and accumulate more tokens. That's what I want. I want the prices at these levels to be gobbled up, so that there are no more tokens at these prices. And then when you gobble up all of the liquidity at the lower prices, what happens is the price starts to move up. Eventually the demand will outstrip the supply. That's just how it works. And the other thing is that if you were to look at every single token, there was a low liquidity environment. Okay, if you go and have a look at Bitcoin, right, and go all the way back, look at this. Where's the liquidity in Bitcoin? Going all the way back. Oh, actually, there's no data there. Look, this is where the data begins, July the 10th. 15,000 Bitcoin, 19,000 Bitcoin. Come on. Every token has low liquidity periods, yeah? It's no big deal. Doesn't mean anything, yeah? But you telling me, even in this low liquidity period, that this candle, these candles were insignificant. Well, you had an increase in volume when this price dropped. That's true. But ultimately, let me show you what happened. This is a low liquidity environment. This is Bitcoin, right? This red candle is a 27,000 candle, right? This red one here. Regardless of the low liquidity environment, the price had to flip that candle from resistance into support. It makes no difference. It makes no difference about the low liquidity environment. When you're forming candle formations, when you're forming structure, you still have to do exactly the same thing. Yeah, you had increasing volume on all of these candles going up, but fundamentally what needed to happen was the same thing. You needed to flip this level into support, and that's what happened. The price went up and it flipped into support there, and then the price continued going up. Why did the price come back to these levels? Why? Because this candle it means something. It doesn't matter that it's a low liquidity environment. Yeah, this is the 3-day chart. Yeah, look at where the price came. This is going back to 2010. Look at where the price came in an extremely illiquid environment at a time where it was extremely difficult for people to buy and sell Bitcoin. Very difficult. They had like that stupid Mountain Cox exchange, I think, or whatever. I don't know. Just it wasn't easy. I know it wasn't easy, and it's the price still did the same thing, right? You had an increasing volume which took the price above a previous level, and then the price reacted off the level which corresponds exactly to this low liquidity environment candle printed on the 3-day level. Yeah, so when I say that this candle that we have now needs to flip into support at the top of the candle just like this, I'm looking at Bitcoin. I'm looking at every token. Every token has the exact same path in low liquidity environments. Oh look, surprise, surprise. This one was actually front run, but I'm going to show you the exact same thing. This candle, this red candle here, was a 228,000 volume candle, still low in the context of Bitcoin. And you see the price did attempt to come, and this was front run because of the demand. But look, the price does still try to come back to these candles. Still have to flip. These candles do matter. You can't ignore these candles just because you're saying to me low liquidity, let's ignore candles. That's literally bullshit. Yeah, so when I'm looking at TRVL, right, when I'm telling you that we need to flip, this is the same time frame. Yeah, when I'm telling you that we need to flip, let me get rid of this shit. When we need to flip this candle, this one here, this red one, into support, it doesn't matter about the liquidity, the environment. Yeah, we need to flip that into support. Yeah, and that corresponds with many levels with that which I already drew. And when you look at all the other tokens, they behave exactly the same way. Yeah, so these candles do matter, but I wouldn't they're points of reference. Ultimately, we'll see the formation of candles, and if we can form candles like this, then it will go up. yeah, because that would be a confirmed SR flip. That's the target for the bulls, yeah. And I've shown you on Bitcoin how that behaves. And then the guy's probably going to respond to me and go, oh, but that's Bitcoin. Your Bitcoin is special. No, it's all the same shit. You know, it's all the same. It's all the same. Every token, everything, it all behaves the same way when it comes to candles and formations. Yeah, you can take fractals and you can apply them all the way across the whole market, because basically the formation of candles is reflective of the market and the psychology of the market and the supply and demand of the market, and then obviously in certain circumstances it's the liquidity or the lack of liquidity of the market. All of these factors come to form candles, because it gives you all of that information just in the way they form. Now, I may not have confirmation on one single candle in itself, but then the formations, the patterns, all of those things matter. And then obviously you can add your other tools such as volume levels, and then other tools such as the Fibonacci tool, and you can get more in-depth analysis, which people back then didn't even have. The fact that in Bitcoin they didn't have those tools, and the fact that Bitcoin was able to do what I just showed you in terms of this first candle, how it flipped into no one had tools back then, really. No one really was trading the way we are all trading now, technically trading. But if I was to, like, I don't know, if I was to just let me just do a fib now just for fun. What do I want to do? Just for fun, let me just do something random. Let's pivot to the high. Is that a fib? Probably an extension, huh? Oh, surprise, surprise, look. It comes into my fib extension, my TR pocket here. Oh look, surprise, surprise, look how far it extends to the 1.168. You know, and then it comes back to back test this 1.414. I mean, look, I just did a fib extension on an extremely illiquid environment on Bitcoin from this pivot high to this low, and the fibs all match, the extensions all match. Yeah, I didn't make that up, it's just happened. I just did that now. And look, even on the highest time frame, look at the 2.1618. Look how it kind of, obviously it overshot, but ultimately, you know, the behavior, even in illiquid environments, still conforms to certain principles, and you just can't ignore it. Alright, so that's TRVL. If anyone has any questions, or if anyone wants me to stream